Despite the fact that the macroeconomic calendar is empty today, the market situation depends on news about Brexit. The closer the data of the UK's withdrawal from the EU is, the clearer it becomes that the trade agreement will hardly be signed. The agreement should regulate the relationship between the parties from December 31st. In fact, the UK will be a total failure in this battle, as without access to the European market, most British companies will suffer significant losses. At the same time, the European market will easily replace British companies with the European ones. That's why London has even decided to resort to blackmail and empty threats. Thus, ahead of a new round of the negotiations, Boris Johnson said the UK would still be left on October 31st with or without a deal. At the same time, the Prime Minister once again blamed the EU for its unwillingness to make a consensus on a number of key issues. This proves the fact that London simply does know how to solve the problem. Thus, there are grave doubts that both sides will arrive at a compromise. Since the beginning of the trading week, the news has been negatively influencing European currencies. At the moment, the impact is insignificant. However, new information could make it stronger. At the end of the previous week, the pound-dollar pair was actively hovering within the range and reached the level of 1.3200. After that, the pair returned to the level from which it began the rally, the prices hitting new local lows one after another. It means that sellers may push the price even deeper. Thus, during the Asian session, the market sentiment was bearish. As a result, the pair returned to the level of 1.3200. If the price fixes below 1.3175, a low recorded last Friday, it may drop to 1.31. According to the alternative scenario, the pound-dollar pair may slow down and start trading within the levels of 1.32 and 32.70. During the previous week, the euro-dollar pair showed a sharp decline to 1.1790 and 1.18 from the psychological level of 1.20. When the quote approached the level of 1.18, sellers faced significant problems. They were still trying to pass the mentioned level, but in vain. According to the trading chart, the euro-dollar pair is hovering within the narrow range, mainly near the level of 1.18. Market participants are likely to focus on the range of 1.1780 and 1865. The best trading strategy is based on the break of the limits of this range. That's all for now. We continue to learn developments on financial markets. Subscribe to our channel and keep abreast on latest events with us. See you in a couple of hours on our channel with a new video.